You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means only one thing. It is Friday. It is 1 p.m. Central, 2 p.m. Eastern. Yup, it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from this fine network upon which you're listening to this right now. If you just subscribed to Vol Views and you haven't upgraded to the full network, what are you doing? You're missing out on a whole week's worth of content. There's more than just this show out there, so check it out if you haven't done so already, wherever you get your finer podcasts. And if you like what you hear, make sure you leave a review. Keep the influx of new folks discovering this program, particularly in these turbulent, volatile times. It's important to have the folks out there who are scrambling to figure out what the heck's going on, having them discover a show like this. And, of course, however you listen, keep those questions, those comments coming. We do love to hear from you guys. And joining me on the old Volatility Views program this week, first off, from the town that changed America and also from the global headquarters of the Carmen Line / Option Pit Empire, it is the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Greasy Meatball, welcome back to the program, sir. How's your Friday going?
Not so bad. You know, I had to go to the office yesterday for the first time in probably 2 months. Don't worry, it was after everything was closed. I literally didn't see anybody. I'm still socially distancing. But I had, the last time I was there, I had left coffee with cream in my coffee cup. And if you want to know whether bacteria and fungi can grow in a coffee cup, then the answer is yes. One of my favorite coffee mugs, and I did not even bother. I just threw it right out because that thing was the scariest, grossest thing I've ever seen in my life.
That's a lovely image to start the show here. There you go. 2 months worth of bacteria there, listeners. A lovely image to kick things off. And also joining us, holding down the MIAX hot seat this week, old friend of the program, hasn't been on in a little bit, even though I did make a visit to his stomping grounds not too long ago. Mr. David Lincoln, formerly of the Short Vol Show, now of VIX Crush infamy. Mr. Dave, welcome back to the program, sir.
Well, thanks for having me back. Yeah, it's like all the days roll into one now with the social distancing stuff. It's hard to tell if it's day or night or what weekends really mean anymore as everything rolls together. So yeah, I'm here on time, and I'm happy for that.
It's crazy. Yeah, my kids are home. My wife, everyone's home. Only way I know the days now is when I retreat to the studio and what show it is that I'm doing. That's how I know what day it is. Other than that, you're right. They do kind of blend together now. But what doesn't blend together is this show. Let's get to it. It's time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we break down what the heck is going on in the world of volatility, the trades, the trends, the developments, the unusual activity, all that good stuff. And it's another interesting end to another interesting week. That's pretty much, I could just record that, which we are doing, and just play that every week now. It has worked for pretty much the past couple of months, and it probably will work for the foreseeable future. Every week, something else crazy and weird and bizarre and unanticipated unfolds. And coming into this week, we kicked off the week pretty strong. It seemed like all was right with the world again. There was a lot of optimistic news coming out of Gilead and their tests, their trials initially for their drug to treat the coronavirus. Even Dr. Fauci coming out saying maybe it showed some promise. So that, of course, gave a lift to them, gave a lift to the broad market as well. There was talk about vaccine research going on over there in Britain and accelerated trials, and that's even more exciting than a treatment is a vaccine to hopefully prevent this going forward. So a lot of the market was in this uplifting mood. And then towards the latter portion of the week, we saw that worm kind of turning a little bit. Maybe some of the results for coming out of China with those drug results or drug tests for Gilead, not so good. And then other things compiling earnings. Now, of course, coming into today, we're seeing the exacerbating of perhaps the formerly off again, now perhaps on again, soon to be trade war with China out there again. So the market's getting a little bit of the old spook back. S&P off almost 3%, getting back to the plus or minus 4% days again. The Dow off about 2.5%, NASDAQ off over 3%, about 3.33%. Oil and gold both trending up today, and our old friend Spikes and VIX Cash also up a wee bit. Our friend the Spikes threatening the 40 handle right now at about a 39.67 or so. That puts it up over a point, about a point and 2.5 points actually from where it was this time last show, close to it, about 2.25 points. And our old friend the VIX Cash coming into showtime at about 39 1/3. That puts it up, looks like about 2 handles almost exactly from where it was this time last show. Of course, other things weighing on the market this week as well. We saw pretty bad jobless numbers yet again, 3.8 million or so. That's 30 million, 30.3, I believe, total jobs lost just in the past 6 weeks. That puts unemployment for April at about 14%. Looking at numbers going forward, thinking more around 18 to maybe 19% going forward. If you're curious, by the way, unemployment topped out during the Great Depression at not quite 25%, 24.9%. So we're not quite there yet, but we're not that far away either. And it seems like such a distant memory now, but unemployment in February was 3.5%. Oh, how the worm has turned in a couple of months. That said, looking back on previous months, March, of course, was a pretty bad month. It was the worst decline ever for the S&P. April, now that we have the numbers in, April actually turned it around. This week, of course, notwithstanding. Of course, we are in May now. We are May 1st, so new month here, new, fresh record books here. S&P was up 12.7% in April. That's its best month since January of 87. Everyone always talks about October of 87. No one really looks back to January of 87, but that's where we find ourselves right now. NASDAQ up almost 15.5% for April. That puts it less than 3% away now from its close in January 2020, which was its highest monthly close on record. So that's insane. Of course, today's sell-off going to mitigate that a little bit. So a lot to unpack there. Maybe, David, you're our guest there in the MIAX hot seat, so we'll start with you. What is lighting up your tape out there in these endlessly will they, won't they, up and down weeks we're having out there right now? More so on the downside right now, Dave.
Well, I mean, the trader gossip today has been all about Elon Musk, and usually there's that famous Twitter tweeter in the White House who's has the headlines in Twitter, but today it seems like Elon Musk has the headlines in the Twitter front, and we saw that Tesla have that huge rip up yesterday morning and then reverse course by the end of the day. And now, of course, it down. I'm also watching Amazon very closely, down $170 at this point today. And also, like many traders, I've become a little focused on that oil. After all that craziness last week, it looks like the June future got back over 20 today. I'm not really quite sure which future I should be following, but I think it's good news that oil's kind of come back a little bit. But yeah, it's a whole hodgepodge of things to be watching today. But we've given back a little bit, and we know realized volatility is up a little bit, as you mentioned. After not moving at all, we've got indices back moving again. So that's really noticeable to me.
And I know you like to hang your hat mostly on the short vol side out there, but we'll get to Musk and all his madness. We'll get to a lot of the earnings and the individual names popping off in a little bit. We're probably going to get to crude oil in a little bit as well, too. But I'm curious, just from a broad vol perspective, what's lighting up your tape out there these days, Dave?
Well, I've noticed that with actual options on the VIX, we've seen more action kind of below strike. The puts options have been, very active. And so you'll see several, the couple days that we actually saw the VVIX up, when I actually dug into the numbers, I saw that was due to, to put buying to the downside. As we're, historically above the averages in the VIX, we've seen those downside strikes be more the focus than typically those out-of-the-money calls. So that's been something that I've been watching lately.
You like watching VVIX, our old friend VVIX, up yet again today. Maybe we can unpack a little bit of that as well. Up at least from where it was on our last show. It was a 121 coming into showtime, which puts it up about 4 points from where it was this time last week. It's actually up even more than that now. It's up to about 122 and a quarter. It puts it up 5 1/4 handles from where it was this time last show. So a lot going on the vol front. We turn our attention now to that super fun Volatility Trading Club, them out there with the secret handshakes and the cool MAGA/F-MAGA. That still brings a smile to my face. F-MAGA hats out there. Mr. Meatball, what's catching your eye out there in the vol land this week? What are your crazies up to in the pit chat and the vol club? And more importantly, how is the production of the MAGA and F-MAGA hats going?
Well, right now, neither of those are producing very much right now. We talked about how, this rally was kind of built on sticks from 5 stocks. So then Amazon misses pretty badly, and you see the market really taking in the chin. People are wondering, well, why are we selling off? Well, Amazon just came out and said, we've got a lot of sales, but our costs are astronomical, and we've got all these issues, and that's part of the reason why we're down so much. We're also, I think seeing a little bit of market overall retrenchment and realizing that, hey, maybe volatility got a little oversold, because I think it did, and the market probably got a little overbought. We've been commenting that the SPY and the NASDAQ had completely outperformed the Dow Jones Industrial Average, and that seems to be regulating itself a little bit. In terms of volatility, I would point out that we've gone back to we were for about 3 days in a contango, from Monday midday all the way till middle of the day yesterday. We were in a contango, and now we are backward in the market. And fully backward. So with the May contract really tracking the cash index, and that I think is the really interesting piece. When we see that front month contract with still 20 days to expire, right? May futures actually expire after regular May this month, folks, if you're not aware. Regular May expiration is May 15th. VIX futures expiration is going to be May 20th. So be aware. And so we've got a decent amount of time to expire. And that May future really tracking the cash index. And it makes me, when I see that kind of behavior, it tends to have me thinking that we are more than likely to see the VIX itself get pushed higher, not lower. So we may have another day or two of selling here with this VIX index. That's what I'm seeing. So we can see that. I think we got the VIX going over 40, maybe 45 next week, and you can see that VIX future in May at a minimum make a run at $40 a contract. I'd point out that there are some really inexpensive plays in the VIX options on upside that are just screaming, and even VXX, which with us in a backwardation has a little bit of a push at its back. There's some really inexpensive trades that you can put on. I was looking earlier today with Andrew at the VXX regular May 43.47 call spread for under $1, and so you're getting a $4 spread for less than $1. That is right at the money. That's a nice little play on vol rallying, because I think we're gonna see a little bit of a vol rally here for a few days.
How often do we talk about verticals to the upside in VXX? Not too often, though. Maybe perhaps we are in that moment again. Vol certainly firming up right now, at the very least out there, which is looking good for my vol prognostication. We'll see if it stays that way or not out there. Let's see. Speaking of vol, obviously, as we want to do on this show, we've said many times here that we're in this rarefied environment right now where everything is fully electronic for the first time in all of these products' lives, effectively. We haven't seen an all-electronic VIX, all-electronic SPX, and now we're seeing all of that as well as everything else. Euro dollars, throw it all out there. We're starting to see some input on that now. I'm starting to see perhaps some indications of when that might come to an end. CBOE reported their numbers this week. Surprise, surprise. Record profits out there in the vol space this week. But they did hit on a nugget a lot of you have been asking us about of late, which is they're planning to reopen their trading floor on June 1st. So exactly a month from now. And as they talked about it, he did mention, Ed Tilley over there, that they're looking to, quote unquote, resolve some customer frustration. He said there is still some customer frustration with trying to trade certain complex products only on computer screens. That's, of course, something we've said many times here. There is still a core audience in the VIX and indeed certainly in the SPX that likes their complex, funky spreads. As someone has had to quote a lot of that crap for years, there certainly is an audience that likes that stuff. And it's difficult to do in an electronic environment. Just think of it logistically, listeners, just the difficulty of entering those versus picking up a phone and rattling off exactly what you want to do. It's just a much more difficult process, let alone getting good quality quotes back and everything else like that. So CBOE planning to come back on June 1st. They did ask, by the way, some of the analysts why don't they just close it completely, which is a point a few of you have raised over the past few months, and Tilly responding to that. Customers haven't found that satisfaction yet with all electronic trading, still have great utility in the floor. So as I've said many times, CBOE definitely coming back. Open question. They asked Terry Duffy at CME that same question. He wasn't willing to give a date. And I've said before, CME less vested in the floor trading game than CBOE. There. NYSE also diving into this fray a little bit. I believe they're a COO coming out recently with some data showing the average spreads. Again, they're looking at NYSE, so mostly listed stocks, but it applies, I think, to options as well. About the average spreads in their stocks, it's about 12 points higher on the NYSE and looks like almost 20 points higher on the NASDAQ compared to the month before that when everything was still floor-based, which raises an interesting question, one I'd be curious to get your guys' thoughts on as well, which is, what role does the trading floor play in this environment. We have seen protracted volatility for some time. You and I have commented many times on this network, Mark, and others have as well, that things are thin, things are ridiculously wide. That's going to exacerbate volatility. And also, are you looking forward to that day, June 1st, where perhaps the CBOE can reopen the S and the VIX as maybe some sort of a semblance of a return to normal? Maybe, David, we'll start with you out there. First off, do you think the lack of that mitigating floor presence has played a role in the exacerbating of volatility that we've seen over the past month? And then B, if so, are you perhaps excited to see at least the CBOE get back in the fray on June 1st?
Well, yeah, of course. When we're all electronic, if people don't want to trade, they can just turn off their screen and disappear. And although, the floor is much more of a hybrid type situation than it was when all three of us were down there trading, it still is a situation where you can kind of hold people's feet to the fire a little bit more than the electronic world, I would think. But it's not the same as the floor was way back when market makers were required to stand there and make a market, and it was sort of enforced. Nowadays, people don't want to trade; they just they turn off. And added to the fact that some of the retail business has disappeared. Some retail people, at least that I've talked to, have just thrown up their hands and don't want to trade during this environment. So we've seen characterized by loss of liquidity. Of course, I think turning the floor or having the floor start up again will help a little bit. And as you said, they can quote those more complex trades now with them on the floor, which I don't know how you do them electronically without the floor presence. But, this is a trend that's going to continue, and eventually there's going to be no floor. We all see it coming, and it's just a kind of a question of when to me.
Mr. Meatball, same questions for you. Do you think the recent vol we saw was exacerbated by the lack of that glowering floor broker staring at the market makers, making them make a little bit tighter market? And also, if you agree, B, are you looking forward to the return of this proposed June 1st date for the CBOE getting back in the action with SPX and VIX, sir?
So what I will say is take a look at oil and what happened last week and ask yourself if there was floor traders in that pit and there were guys that had a pit that allowed you to trade the roll, would what happened in oil have happened? And I think you have a hard time answering yes, because there would have been some people to apply some logic and sense to that trading. And, maybe, who knows, maybe I'm wrong, maybe it trades worse. But I think that what you're seeing in oil is a reason. And then in the drop in SPX, I've heard that the system that they set up for SPX traders to do complex orders has been nothing but a nightmare. And and there are some people and some firms that will remain nameless that have been screwing with the trading in there. And so I think that the CBOE absolutely misses the floor and misses the SPX. I think the VIX markets would be tighter and better if there was still a floor there. And I think CME probably should examine whether they set up some pits, at least while things are kind of blowing up for oil, in order for proper management of that futures roll, because it was an unmitigated disaster when they tried to do it all electronic. And, the other piece with oil is they basically had another 1987. I didn't know this. Oil doesn't have a limit. I think because they thought that couldn't happen. And, that was some of the nuttier things that I've ever seen. But yeah, you get some guys on the floor and you're going to have people that actually know how to trade oil that are sourcing places to put that stuff when it gets out of credit. So guys that already have a source because they probably have accidentally taken delivery before. And so I do think that they probably missed the NYMEX at least once, since they closed the NYMEX floor in 2012, something like that? When did they close the floor?
I think it was more recent than that, but I forget the exact year.
Yeah, something like that. This is probably the first time they really missed it, but they could have used it. And I think when you see these big And this is why the NYSE keeps a floor around, is that there's a point where computers break. They still, as great as computers are, they still screw up and can't process things outside of their box, right? That, they're a very much set up around normal trading, not these special situations. So there needs to be a floor, almost specifically for that. Just having, here's the sad thing is the amount of money that the CME saved getting rid of those pits. You got to ask yourself, well, how much business did they just cost themselves relative to the cost of getting rid of managing a pit with 10 oil traders in it, right? As opposed to just moving it into Chicago. And I've heard similar complaints in some of their other less liquid products like beef and pork and cattle. When you open up electronic trading kind of carte blanche without the floor, it allows those computer algos to go wild. And and I think that's maybe something that needs to really be thought about in terms of how we trade is that, for now, even if it's a virtual floor someday, maybe there's going to need to be some human intervention and for longer than people realize, right? Because we never know when we're going to have that truly crazy blow up event and in something that's as liquid as oil, right? I mean, imagine if what happened in oil happened because there was some Chinese investment that needed to roll a 10-year treasury, right? Or corn or pork or whatever. Or what if it was the other way, right? What if that was the other way and oil just went up, 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 right? We actually, that is some things you need to think about, especially in important products like oil, where, liquidity can dry up, which is what we saw.
You're right. That probably was the risk everyone foresaw, not the downside negative, but you're right, spiraling out of control to the upside and all these visions of a return to the late 70s. People were lined up at pumps and there were shortages. And I think there is a point to be made. And we have, reached out to CME. I want to get those energy guys on our TWIFO show soon so we can hear exactly how all this process unfolded about doing things that were somewhat never really anticipated before, like listing negative strikes in a crude oil product. And I think there is something to be explored to the notion of, at the very least, that restrictive element of the trading floor. We're all joking here about when the floor broker is glowering in your face, looking for a quote, and you had the temerity to make them a quote with negative strikes. So what would that look back be like? There is that limiting element, and whether that would have been enough to overcome the vast array of macroeconomic as well as OPEC and Russian stupidity factors that are playing a role in this negative oil debacle. That's an open question, and one I'm sure a lot of economists and others will debate endlessly once all this madness is behind us. By the way, it looks like the NYMEX closes around 2016, so a little bit more recent. So it would have been interesting to see if guys were standing out there. You're right, if they would have been able to execute this a little bit better. We will get more into crude in a little bit. I know you guys have some questions, and there are some headlines about that right now as well. But let's get out before we get into that again. Let's keep rolling here on the old vol space, get into some of the earnings I know you guys are excited about as well on the earnings vol front, like Tesla and everything else going on out there. Coming into showtime, of course, on the futures front, we are seeing Spike's futures still halted. We had Shelley on last show. Obviously, this is not an ideal environment for them to move forward with getting those futures resumed again because everyone in D.C. is kind of shut down, or if they are around, they're focused on other things than getting new products or existing products relisted out there. So probably a little bit of a delay as expected with that. The VIX futures come into showtime. We're back in the old backward territory, as we were saying at the top of the show. Kind of firm, kind of juicy out there again. Come into showtime, we saw the cash had about a 1.5 point premium to that May future, and the June future was a little bit north of 3 points. It's about 3.15 points out there to the cash. So the cash and indeed the front portion of that curve backward again, which maybe for a lot of you is more normal feeling than the usual contango out there. Maybe you feel more at home in a backward VIX curve because we've been seeing it for some time now. That's just kind of what you've come to expect out there. Let's move on out to the options front out there. VIX options, as you said before, haven't really been lighting it up out there. Maybe a little bit of a break from that today as we're seeing almost a 4% sell-off out there, at least in the NASDAQ out there right now, about almost 3% in the S&P out there. But still, today notwithstanding, we have seen in general a pretty marked downward trend in overall ADV out there in VIX options land. Remember, it was well north of 1 million, actually north of 1.5 million in ADV not too long ago, just a few weeks ago. And now it's well under 500,000. It was at 387,000 as of our last show. So that's back more around a seasonally adjusted January type volume level, which again, it is early May. So maybe we're in that quote unquote sell in May and go away phase, but I don't think anyone's there yet. A lot of other factors are driving. I said that cliche. I should wash my mouth out with soap. I tried to ban that on the network, and here it is slipping out of my own mouth. So I apologize, listeners. But that just to kind of set the table for where we are here. Speaking of set the table, let's break down the top 10 big positions out there in VIX options land right now. Cost you about $1.01, so not a lot to break into the top 10 out there in VIX land. That gets you to the May 45 calls. Number 9, $1.13 of the May 32 half puts. You got actually looks like a three-way tie for those 7, 8, and 9 spots there. $1.13 also of the May 60 calls, as well as $1.13 of the July 28 calls. Number 6, 116,000 of the May 35 puts. Number 5, $1.18 of the June 15 puts. Number 4, 120,500 of the May 32 halves. Number 3, $1.26 of the May 28s. Numero dos here, 133,000 of the May 30 puts. And the number 1 with a bullet spot this week, the May 35's, $1.53 on the tape. If you know anything about VIXLAND, you know we've seen numbers many, many times higher than that for the number 1 spot. So $1.53, that's usually what it costs you to break into the top 10, not taking the top 10. So interesting times out here in VIX options. Maybe let's go back around the horn. Let's start with Mr. Short Vol Infamy, sir. Are there any VIX options trades this week that really have been lighting up your tape or maybe making you scratch the old chin and say this week, Dave?
Yeah, I haven't. But as I said, I've just noticed a lot of put trades going on. I noticed some this morning too, and it some of them seemed like they were so far out of the money that it was just people kind of selling premium. And I've seen a lot of that lately, where people just selling way out of the money puts in the VIX. As you know, I'm more of like a VXX UVXY guy than a VIX guy, but yeah, like you said, not a whole lot, characterized by not a whole lot of volume right now.
Yeah, there wasn't a ton to parse here this week. Mr. Meatball, anything catching the eye of your crazies in your vol trading club while they're exchanging fun MAGA and F-MAGA hats over there? Any prints really catching their eyes or your eyes out there in VIX options land this week, sir?
You know, it's amazing how slow things really are for what's going on. We could see things start to get a little spicier here in the next couple of days, but there's really, it's not been that busy today for how crazy a day it is. I mean, on the day in May, the most active call option I'm seeing right now is the 55 calls. And, you know, I'm seeing a little more activity in June, which would make some sense. That's starting to be where, you know, kind of intermediate hedging activity is going to take place. But even that isn't that busy. It has been remarkably slow, is what I would say. And probably part of that is, again, not having that floor, not having that true liquidity. Because I can tell you that, you know, I went to do like a trade I like personally is the May, like 45, 55, 65, or the 40, 50, 60, either of those. And I went to quote it, and in a front month butterfly is quoting 35 cents wide on the screen. You just don't see that in VIX options, right? The 55.90, no. I mean, if there's a floor there, the market is going to be, 65, I don't know, 70, 85 or something like that, because everything will be nickel wide. Instead, things are wider. And that's because there's again, no floor, no one to force the quote.
Yeah, we touched on that many times on this show, on the advisor's option that hit the network just this week. Listeners, check it out if you haven't already, getting into some of the liquidity issues and some of the big products like SPX have mitigated a bit, and indeed VIX, market spreads, things like that, crunching the numbers with Matt and the guys from ORATS, who was on the show last week over there. Let's move on out to VXX land, product I know Mr. Dave loves to use to fade a little vol. Maybe loves to get a little bit upside, too. I mean, the name is short vol, at least it used to be, and VIX Crush, but he'll get a little upside in there every now and then as well. Coming into today's show, we're seeing our old friend VXX. It was at about a 41.5. It's pretty much still there as of right now. It puts it down about a point from where it was last show. But then again, we're getting into that healthy little bit of backwardation again. So that might be interesting for VXX going forward out here. Let's look at some of the top positions. Let's do a top 5 really quickly out here in VXX land this week. Number 5, 42,000 June 25 calls. Number 4, 54K of the June 16 puts. Number 3, 54,700 to be precise of the June 23 puts. Number 2, 62,000 of the June 20 puts. Number 1 with the bullet, the July 35, as the Irish would say, puts out there. So someone keeping that 35 and just near-term downside level live, I think, rolling out there. They were in June, I believe, last month, so last week even. So keeping that level live, I think, rolling out to July this week. Mr. Dave, same question for you. I know you like to fade yourself some vol. It's been pretty much in the name of all of your shows. VXX is one of the products folks like to do that in. What's been catching your eye out there in VXX of late, sir?
Well, I mean, I totally agree with Mr. Sebastian in that it's not surprising to anybody that, vols come back off the lows a little bit. I think like the entire world had been fading the rally in this market for a very long time. And so this is like finally it's come off the highs a little bit. I think people had been expecting this weeks ago. I did notice this morning, it looks like the 1 May 41.45 call spread traded like 15,000 times. It looks like it might be a closing customer bailing out of the May 41.45 call spread, maybe taking their profits. It looks like there was 15,000 open interest and 15,000 traded today. So I'm thinking that's maybe a closing customer. And, I was just looking at what Mark was saying about that upside spread and kind of crunching the numbers there. But not a whole lot trading. We have noticed that VXX is more liquid than like UVXY, but not a whole lot of liquidity.
Mr. Meatball, same question for you. I know you're crazies in the pit chat and in the Volatility Trading Club when they're not busy doing secret handshakes and whatnot. Whatever you guys do in the Crazy Vol Trading Club. What's catching their eyes and indeed your eyes out there in their other favorite vol product, a.k.a. VXX, sir?
As I stated, I really like that 43, 47 call spread for under $1. I think that's a cheap way to get long vol. UVXY, kind of an interesting one. We were, this time on Tuesday, I was wondering whether it was going to break 35, not run back over 50. So it's been a really interesting week watching those things fly around, UVXY in particular. It's this weeks like this that I lament that they're 1.5 multiplier and not a 2 multiplier. But I continue to like as a spread in everything, kind of long-term, short-term long vol, long-term short vol. But, VXX is maybe not, and UVXY are not always the best ways to express that opinion.
Yeah, I think that makes sense. Here, a little bit of short-term long vol and a long-term short vol. Say that 5 times fast, listeners out there. But certainly, given the way we're shaping up, does seem to make some sense. Speaking of how things are shaping up out here, we've got the numbers hot off the presses from OCC out there for how April shaped up from an overall volume perspective. I'll save the rest of it, the options, the ETF options, everything else for the option block maybe on Monday. But one nugget did leap out at me, which is very much germane to the Vol Views audience, which is the futures. Everyone who knows OCC knows they don't really clear a heck of a lot of futures. It's pretty much only VIX futures. There was for a while there, the CBOE Bitcoin futures. Those are now gone the way of the dodo. So it's pretty much all VIX futures out there. You'd think April would have been a pretty rock'em sock'em robots month for the VIX futures. Yet the OCC saying the cleared contract volume, 2.65 million out there. That's a 52.1% decrease. decrease from April of last year. I'll have to go pull up the numbers for March to see how that compares to March. But that perhaps leading some credence to this notion that these wider markets and some of these crazier, less liquid markets are driving down volumes here, because I did not expect a 52% decrease in overall VIX futures volume last month, certainly compared to last April. If April of 2019 wasn't exactly it's no February of 2018. It's not a blow the doors off month where it's a bad month to compare to. So frame of reference wise, it shouldn't be down that much, which is kind of interesting and perhaps worthy of further study. So I'm gonna highlight that and come back to that in a little bit. I don't think I'll have to go pull up the numbers for March. Speaking of numbers, let's get to a lot of the numbers a lot of you are eager and interested in these days. It's that time of year. We had Matt on the show last week to parse the earnings numbers. Well, even more numbers popping off this week, listeners. Let's get to it. It's the biggest, the craziest, the wildest week of earnings season. Add to that in the mix of the pandemic, this new back and forth dance with China, everything else going on. And it's just a pretty topsy-turvy week to have it all. We kicked it off Monday with AMAT. Tuesday, we had Southwest Airlines, Alphabet, a.k.a. Google. Got the old Starbucks, Merck and Pfizer, Caterpillar. Wednesday, Boeing, GE, Blue Apron, which I've been using a lot lately in this lockdown. Pretty handy. They bring all the food to your house. You just have to make it. Now, it's a pretty extensive making process. It's about an hour for a meal, but it's not bad. Tesla out there as well. Microsoft, Facebook, eBay, Qualcomm. Yesterday, we had American Airlines, Twitter, Mickey D's, Six Flags, a couple of A companies you may have heard of, like Amazon and Apple. We had United Airlines today. We have Exxon and Chevron and Honeywell. Let's start. Let's start perhaps where Mr. Shortval was kicking us off here at the start of the show. All things crazy town Tesla, because they're pricing in one thing for the earnings, but you always have to price in this extra Musk factor when you're pricing in any vol. And I'll just tell you how the numbers shaped up coming into today. Our earnings, remember, you can check out all these for yourself. Earnings move results reports, courtesy of our friends over there in ORATSland. Just go to theoptionsinsider.com. Click on that options news and articles tab. It's all there for you. Dozens, if not hundreds of tickers, breaking them down before the earnings, leading up to it, and afterwards as well. And leading into Tesla's earnings, they closed at almost 800 even, 800 and a half pretty much out there, which seems like a far cry even from today's price out here. And then they were pricing in about 9%. In the initial blush, that seemed too much because they only delivered 6.7% in that initial move. But again, you got to factor in holding periods to the end of the week, and you got to factor in that Musk factor, which today is worth, another 10%. I laugh just because it's so insane to the downside. He has now since come out during the earnings call and beyond on Twitter. Of course, he's been making a lot of headlines earlier this week saying these COVID lockdowns are fascist, which got a lot of strong response, as you might imagine. And now he came out recently. This is reminiscent of his appearance on the Joe Rogan podcast. Now, he came out recently and said he's going to, quote, sell all of his physical possessions and also materially for Tesla investors. His stock is too high. This might be the moment where maybe the people should go back and say, hey, remember we're supposed to have some guy out there watching him and checking all of his tweets before he puts them out. That might be one they may have wanted to catch because the stock is now off about 10%. It has rebounded a little bit. It's only off a mere 9.5% right now. We're about 7.08 right now coming into today's show. I could get going with more of these earnings here in a second, but I know, Dave, you were talking Tesla at the top of the show. Is this one you've been slinging in your short vol ways? You trade a lot of Tesla out there when you're not slinging SVXY and UVXY and VXX, sir?
I mean, I just have to caution people to be very careful with Tesla. It's a monster beast. I was playing it to the short side when it was up in the 900s there, but I feel like I covered too soon. But this is a monster stock, and if you think you understand it, then you should back up and reevaluate because it will roll anybody over. Like you said, the tweets and everything, I still think it's overpriced up here, but what do I know? It rallied to 800, so be careful. I have traded like condors and stuff in it before, really wide. I did have a condor on before earnings, but I definitely planned to and did take it off before earnings came out because this is a monster. So if you're going to play, be careful. People think, oh, it's so mispriced. You see an options trade, you're like, oh, that's so mispriced. And it's like, I urge caution to everybody involved with Tesla.
You're no fun, sir. Party pooper. No, I'm just kidding. Of course it is. It is sage advice. These are insane names. Let me highlight a few other names that are popping off this week that you may have heard of. We had good old Softy, who's been in our top 10 from options volume for quite some time. They were popping off on the 29th. They closed at almost 177.5 going into their earnings. They're pricing in about 3% from an earnings straddle perspective, about 2.9%. They delivered a whopping 1.1%. And then coming into today's show, so they were at about 179.5 after their earnings. They're at about 175. So they're off about 4.5 handles here. So they have delivered in the post-earnings move a little bit. Again, that gets back to the frame of reference for how long you're holding or trading this earnings premium here. Twitter, same deal. They were closed at 31.09. They're pricing in a pretty hefty 8.6%. They delivered 2.5%. So not exactly living up to it. And then coming into today's show, though, they're down, looks like about almost 2.5 handles from there. So they have delivered net in the post-earnings blush. If you held it all the way through to today, then you're looking all right. Facebook, they were pricing in 4.6%. One of the few names that outperformed in the initial earnings blush. They were trading at 194.19 going into their earnings. They actually delivered about 5% in terms of earnings move, and they're closed around 203.5 or so. Right in the early blush of this report. Again, there's hundreds of tickers here that we could parse. A few names coming up as well. We had Amazon last night after the bell, and Apple. Let's see. Apple was pricing in. They closed at 287.73. They were pricing in 11 and they were pricing in 10.79 actually, which was lower than their. It's just kind of a trend we've seen. People pricing in lower vol this cycle, which seems counterintuitive given all the mad unknown unknowns lurking out there. But still, a lot of firms pricing in less vol this cycle than compared to last. In the past, they've moved over 11.25, 11.28, so about 50 cents light out there. And yet, of course, now they have delivered that in the post-earnings blush here with the stock moving a little bit. Tale of two names there with Apple as well. They're at about 290 right now, so actually net, they have actually under-delivered. So I guess that makes some sense there from an overall underpricing vol perspective. Even in today's mad sell-off, they're only down less than 1%. Amazon, of course, is the one that made all the headlines. They were talking about taking $4 billion worth of profit for the quarter and putting it back into protecting their workers and everything else for this COVID-19. And, of course, their customers hopefully as well. They were at $23.72 coming into their announcement. They were pricing in about $108 worth of juice. That may seem juicy, and it is, because compared to previous cycles where they've delivered about 97.25 worth of movement. And so Amazon, of course, market not liking whenever a company says they're going to plow their earnings, as opposed to what Apple did, give their earnings back to the investors. Amazon said they're going to spend that. Market not exactly liking that. They're at about 2,300 even right now, which puts them off from the highs of 172 handles and from when they closed at their report, about 72 handles. So net from going into an earnings blush announcement, maybe they actually look all right because they priced in about $108 and they're only down from that level 72 and change. So interesting stuff. Again, there's tons of tickers to parse out here, but I want to make sure we get some of you guys on the show as well. Yeah, let's keep on rolling. We'll save some of that China not happy about crude oil. I think that's a given. Some of the things Russell and I were talking about last week on TWIFO, or 2 weeks ago, a week and a half and change, about what's going on with that Chinese structured product causing some of that massive sell-off in WTI. We'll get to that next week on the show. So we have to keep on rolling. It's time for you folks to join us. It is time for your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, before we get to your questions really quickly, we have a keen-eared producer here. They went and dug up the March futures volume coming out of OCC. March futures for VIX cleared about 7.8 million contracts in March. So the April volume, by comparison, was roughly a third, about 2.6 million. So not only was it down 52% from April of last year, but down precipitously from just last month. That's really surprising to me, and that's something structurally is going on over there, which I want to dig into a little bit. Obviously, March, the first half of that month, we weren't fully electronic, so that could certainly be accounting for some of that, and now all of April we were. So perhaps that's to blame, but either way, VIX futures down precipitously this past month, which is a little bit interesting. And, of course, also surprising that CBOE is able to post such good numbers, despite the fact that core product of theirs perhaps not lighting it up. Oh, let's see. So many questions here. I'm going to skip the what do we think of VIX at these levels. We get those a lot. It's kind of a very vanilla question here. An interesting one. We kind of is talking about earnings here. This comes from Edson. Edson wants to know, why do you think so many firms are underpricing volatility of this earnings season? Well, I just talked about that. A lot of the firms we've been profiling here, and you can see it for yourselves in our earnings move reports there, they're pricing in less vol than they have actually delivered in previous cycles. And that is surprising because we don't know what's going on. In fact, most of the large firms out there are giving no guidance, which is usually a huge red flag and a cause for a lot of potential volatility in the future. And yet we're seeing firms underprice that, which is kind of surprising. And it certainly has surprised me. It's not at all what I suspected. I don't know, Mr. Meatball or Mr. Dave, I'll let either one of you have a stab at it if you want. Are either of you as surprised as I am that many of these firms are going into their announcements effectively underpricing vol? Maybe Dave, I will start with you. How's that?
I just think that we've seen with the realized volatility of the S&P like coming in so much and the market just kind of sluggish and not moving at all. I just think that whole sentiment has moved over to some of these equities, and people have seen like these terrible unemployment numbers and the market still rallies. People have seen this like just craziness out there and there's all this negative news and the market still kind of slowly rallies. And I think that whole feeling of the market like having this lower realized volatility has just kind of leaked over into these stocks. But it might catch a lot of people by surprise if we all of a sudden spring back to life right now like we seem to be doing at the end of this week.
Mr. Meatball, same question for you, sir. Are you as surprised as I am? And it sounds like Edson is as well here, that a lot of firms are underpricing their earnings vol, or do you think maybe this is the right way to lean?
You know, what I'll say is that, up until early in the week, earnings premium had actually been significantly overpriced. It's only the last couple days that chicken has come back to roost. And so with the first week and a half being really underpriced, that's a decent bet that the second half is going to be more overpriced. And thus far, we've seen that in Amazon and Tesla and not as much Apple. But I'm not surprised, but I expect things to equal out maybe next week. Now that we've gotten a chunk of these out of the way, I think expect things not to be as underpriced as we head into earnings next week, especially with the pop in the VIX. You know, you've got the big thing you've got to remember is you've got this big heavy weight sitting on index vol, and that index vol naturally is going to pull down individual equity vol, and that was a bit of what kind of drove us. That's one thing we know about earnings vol. It is cyclical. If they underprice one cycle, then everyone blows the doors off. They're going to overprice the next cycle. So we'll see how that plays in. That could mitigate week to week as well, intra-season, which is why we have the earnings season report as well for you guys to check out. Looks like a lot of you guys have thoughts on the old YouTubes. Let's end on these. Jack K just says, more YouTube content, please. Well, we got all the shows out there for you now. In fact, you guys clearly like it. In fact, we also have another one. Dave, you'll like this one. This comes from Baiju Thomas. He says, hey, Mark, I've been listening to the podcast for over a year now on Spotify and YouTube. So, yeah, they've been available on YouTube for a long time, listeners. We just don't really talk about it. But if you want it there, it is available on the old YouTubes. He says, thanks for keeping them coming. My question is, have you ever considered video streaming your podcasts? I've seen you on Famous Dave's VIX shows, and that video was great. Or if you are able to show your presentations on screens as you scroll through the numbers, also could be great
for me to keep up to so many stats that you discuss. Thanks. We have toyed with that idea there, Baiju, and it is one we kind of worked on. And you see sometimes how difficult it is to get people to get their audio working correctly. We haven't wanted to send out a bunch of webcams to people and everything else and get them to provide a reliable video footage for you guys to watch, let alone having to switch back and forth with it and everything else like that. So we haven't done that. That also would mean I'd have to shave my pretty thick and lustrous quarantine beard I got going on here. I don't know if anybody wants to see this madness here. But showing the screens and sharing some of that data is something we have considered here, and we are kind of working on some ideas for that behind the scenes. And at the very least, if you like a visual component to your shows, to your podcasts, YouTube, they're all available there. You can watch the little static image of the cover art go by as you're listening to the show. What do you think there, Dave? Baiju, clearly a fan of yours as well, getting a little bit of love on my show here, Dave.
Yeah, that's beautiful. I'm actually enjoying not having to be on video right now. It's like it's a very relaxing thing to have a change and not have the light staring me in the face for a second. So I think that you have a particular niche that is a great spot to be in, and I like where you are now. But everybody wants more of you, of course. They love you. I
guess there are worse things than to be in demand. But yeah, that is available. Not so much a webcam from the studio kind of thing, but there are the shows available on YouTube if you want to listen to them on that platform as well. And we are experimenting with more ideas for interesting new ways to get you guys this content. Meanwhile, it's time for us to head on into the most difficult, the most dangerous portion of the show. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right. Welcome back to the crystal ball. This is the part Dave's been sweating about all show. I know it, because it gets tricky to do this week in, week out. This is, of course, where we attempt to predict what the Vol gods hold in store for us here this week. Coming into showtime, we're seeing both spikes is a little bit north of 39 handle, about 39.20. VIX cash a little bit shy of the 39 handle, about 38 and 3/4 out there. So that puts me a 1.25 away on the VIX side. I was 37.5. And also, ironically, Matt was at a 40, which also puts him a 1.25 away. It looks like Matt and I actually tied, which is kind of funny. Even though, our rules, listeners, if you're outside a point, then it's not a victory. It can take a moral victory, but it's not an action. It's got to be within a point to actually win, even though we have talked about widening those goalposts a little bit when we're now in a north of 30 close to 40 VIX. It's a different beast being within 1 point when VIX is 12 versus when it's 40 or 80, as it was not too long ago. So we haven't done that. We made it hard for ourselves. But maybe, I guess, if we give ourselves a little bit of wiggle room, then I will take a tie with Mr. Matt here for this week. On spikes, I was a little bit farther away, obviously. I was about half a point out there as well. Mr. Meatball was at 34.13. He was feeling the downside, so about 5 handles away. And then Tom from MIAX was at a 36, which puts him about almost 3 points on the VIX and about 3.25 on the spike. So he was out. So Matt and I are going to tie, which means because our guest tied with me, Dave, that I will be charitable. I will give you the choice as our guest this week. Do you want to go first, or would you rather have me go first?
Yeah, I'm going to let you go first. Go for it.
Coward. I gave you a chance, sir. I gave you a chance to redeem yourself. You didn't take it. All right, I will dive ably into the fray yet again, listeners. If you've listened to this show for a while, I've been feeling a little bit more juice for a while now. So this move we saw this week is kind of what I've been feeling for a little bit. We're seeing the VIX curve backwards now out there as well. We talked about that earlier in the show. It does seem like there's a little bit of a firming going up in the near term, which is kind of the way I've been leaning for a little bit here. So we're at about, 39.25 and spikes 38.75 in VIX land. I'm going to say we're going to break a 40 handle this time next week. I don't know if it's going to be too firmly into, not talking to 49 or anything like that. I'm going to say we're going to be at, I have a couple of levels in my head. I'll tell you what, I'm going to split the difference between those two. I'm going to say 41.75 for this time next week on a Spikes and a VIX Cash. All right, Mr. Dave, you get to go second. What are you feeling for this time next week, sir?
Well, I'm sure I have a totally different viewpoint than at least Mr. Sebastian here, but I'm going to go to the low side, probably like, let's say 35 on Spikes and 34.5 on the VIX.
Interesting. So 35, 34.5. Well, I guess that's not to be surprised. The name of the show is VIX Crush, after all. So if you were buying vol, folks might say, what's up with Mr. Short Vol, Dave? All right, Mr. Meatball, you got some goalposts here. You got 41 3/4 on the upside, and you got about a 35 or so on the downside. What are you feeling this time next week, sir?
You know, what I'll say is I looked brilliant until today.
That is the challenge. That is the challenge of this game, sir. Up until the last minute.
I had a dead-on bullseye until we came in today. Completely unfair. All right, so Dave was what, 34?
It was 34.5 to 35 in that range. He's kind of cheating a little bit, but I'll allow it.
So, all right, we'll give him 35. And you're 41? All right.
41.75 for me.
I'm going to take here's what's going to happen. I think we're going to touch yours, but then we're going to come back to mine, which will be 37. 37.04.
Ooh, 37.04. Once again, oddly precise. Hasn't worked out for him of late, but we'll see if perhaps this is the week, listeners, where the odd precision will work in his favor. Unfortunately, listeners, that music means we ran a little long, but we love talking vol with you guys. Glad to see you guys like it too. But before we go, let's go back around the horn. Let's start with our guests, Mr. Short Vol himself. Sir, if folks are intrigued, like our listener already buys you clearly, he clearly likes your show. If folks want to check it out for themselves, where should they go? What should they do?
Yes, VIX Crush channel or at The Famous Dave on Twitter, which is FAMIS Dave on Twitter. So check me out there.
Yeah, FAMIS Dave. Look for the Benny Hill icon. It's hard. It's hard to miss. And Mr. Meatball, if I want to join a cool ball trading club, maybe I want to get a sweet F-MAGA or MAGA hat, not the ones you're thinking of, listeners, a different MAGA. Or perhaps I want to, sign up for your email newsletter and stuff. Where should I go? What should I do?
Yeah, make sure, I'm putting out good, valuable content every day on our blogs. If you're not a subscriber, you need to come to optionpit.com and give us your name and your email, and we will have you all set.
There you go. Optionpit.com is the place to go to get all set. Maybe you join a fun vol trading club. Maybe you join the Pit Chat, or you sign up for a webinar, or to optionpit.com is the place to go. And, of course, I want to thank our friends over there in MIAX land. You want to learn more about all things spikes? MIAXoptions.com/spikes is the place to go for all this data. I was just talking about the spikes data, the settlements, a cool link to a cool show called Vol Views, a snazzy little video there. A lot more you can find MIAXoptions.com/spikes. So just type MIAX and spikes, MIAX, into your browser to find more. And on behalf of our friends in MIAX land and Mr. Short Vol himself and the Greasy Meatball, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in questions. And we'll see you back here next week for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the Spikes Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with Spikes. Learn more about Spikes at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's MIXLR.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.